Very good morning, guys. कैसे हो सब लोग? क्या हाल चाल? Hope you all are doing good. Guys, in this lecture, we are going to revise one very simple and important topic, that is joint product and byproduct. So let's understand some basic concepts. First of all, joint cost. Joint cost is a common cost. Common material, common labor, common overhead are incurred to various products. Okay, common cost. That common cost is called as a joint cost. Okay. Now, there will be one point at which more than one product segregates. That point is called as the split off point. Okay. The point at which various products is segregated, that point is called as the split off point. If you sell that product at the split off stage only, then the selling price is called as the sales value at split off. But if you further process, okay, so if you incur further material cost, labor cost, and overhead cost, which is called as the further processing cost, then you sell the product. That selling price is called as the final sales value or sales value after further processing. So these are the common concepts which are used in every question of this topic, that is a joint cost. Joint cost is a common cost which is incurred for all the product. Okay, for all the joint products. So cost which is incurred before split off point is called as a joint cost. Then split off point is a point at which more than one product is segregated. And if you sell the product at the split off point, that selling price is called as the sales value at split off. But if you decide to further process that product after that split off point, that further processing cost, that is material, labor, and overhead, it is a further processing cost is incurred. Then if you sell after further processing, that selling price is called as a final sales value or sales value after further processing. Okay, with this, let's go to various methods of allocation apportionment of the joint cost to the various main product. First method is a physical output method. Under physical output method, joint cost will be allocated to various product on the basis of physical units, physical output at the split off stage, okay, of the various joint products. So in that ratio, you are going to allocate the joint cost. I'll take one example, guys. Suppose there are three joint product A, product B, and product C. At the split off point, at the point of separation, the output is given in the question. Suppose output is 10,000, output is 20,000, and suppose output is 20,000. Right, guys? So 10,000, 20,000, 20,000 is your output, and total output is 50,000. And say, for example, joint cost is given in the question, 10 lakh rupees is a joint cost. Okay, so joint cost is 10 lakh. Now this 10 lakh will be allocated to product ABC in the ratio of physical quantity. So physical quantity, you can check that 10,000 is to 20,000 is to 20,000. So simple. So 10 lakh is your joint cost multiplied by 10,000 divided by 50,000. Boys and girls, your answer comes to 2 lakhs. Then for B, joint cost will be 4 lakh, and C, joint cost will be 4 lakh. So it is a very simple method. Very simple method where joint cost is allocated on the basis of physical output. Now, one important line here. If any loss is there, if any normal loss is there while production, if any loss is there, that loss will also be allocated in the same physical output. Okay. So if loss is there, then loss, if you can read this. If the loss is there during the production, then that loss will also be apportioned to various products on the basis of physical output. Okay, so this is your first method. Then a similar method, method number 2, that is average unit cost method. Under average unit cost method, you will calculate first of all average unit cost, and the formula is absolutely simple. Average unit cost is equal to total joint cost divided by total physical output. So in our example, our total joint cost is 10 lakh and our physical output was, I think so, 50,000. Then average cost per unit will be 20 rupees, right guys? Average cost per unit will be 20 rupees. Now you just have to multiply that 20 with 10,000, 20 with 20,000, and 20 with 20,000. You will get the apportionment of the joint cost. So first and second method are literally same. In average unit cost method, just you'll have to work out average unit cost with the help of formula, total joint cost divided by total physical output, okay, at the split off point, total units of joint product. Next point. Next, third method. Third method is sales value at the split off. Sales value at the split off. So guys, boys and girls, here, as its name suggested, joint cost will be allocated on the basis of total sale value at the split off. I'll repeat, it is not a sale value per unit. It is not a selling price per unit. It is total sales value per unit at the split off point. Now let's take one example. You have given the output 10,000, 20,000, 20,000. Total output is 50,000. And you have given the selling price per unit. But the selling price should be selling price at the split off without further processing. Okay. So selling price at the split off is suppose 10 rupees and 5 rupees and 5 rupees. 10 rupees, 5 rupees, 5 rupees. Then total sales value. Total sales value will be for the product A, it will be 1 lakh. Right, guys? For the product B, it will be again 1 lakh. And product C, I think so, it will be 1 lakh. So total sales value at the split off point will be 3 lakhs. So whatever the joint cost will be allocated in the ratio 1:1:1. Okay, so this is sales value at split off method. Very simple method, as its name suggests. Joint cost will be allocated on the basis of sales value at the split off. But remember, it is a total sales value and not per unit sales value. Next one. The fourth method, again, it is a very simple method. Fourth method is market value or sale value after further processing, or it is also called as a final sales value method. Under this method, joint cost will be allocated on the basis of final sales value after further processing. And again, it is a total sales value. In that ratio, you are going to allocate the joint cost. Okay, so you just have to multiply selling price, final selling price per unit with the quantity. It will be total sales value, and in that ratio joint cost will be allocated. So first 4 methods are very simple. First method was physical output method. On the basis of physical output units at the split off, you are going to allocate the joint cost. Second method is the average unit cost method. Under average unit cost method, you are going to calculate average unit cost with the help of formula, total joint cost divided by total physical output. So per unit cost will be there, multiply with the physical output. You will get the joint cost allocated to various products. Third method was sales value at split off. On the basis of total sales value at the split off, you will allocate the joint cost. Next, final sales value method. On the basis of total final sales value of the product, you are going to allocate the joint cost. These are the 4 methods. Fifth and very important method, in various examples, you are going to use this method, that is net realizable value method. NRV method, its short form. Short form is also allowed in the examination of this. So NRV method, net realizable value method. Under this method, joint cost will be allocated to various products on the basis of NRV, net realizable value. And net realizable value will be calculated as follows. Guys, the final sales value minus further processing costs, including that selling and distribution expenses. It will be your NRV, it will be your net realizable value. On the basis of NRV, you will allocate the joint cost. So remember the formula, final sales value minus further processing cost. Further processing cost include the selling and distribution expenses. It will be your NRV, net realizable value. In that ratio, you are going to allocate the joint cost. Right, guys? Next one. Guys, in your module, I think so, reverse cost method is not given separately. Constant gross margin method is not given separately. It is a part of NRV method only. But in various examples, you will get this method. Okay, reverse cost method. Now, reverse cost method, what it is? Remember, if in example or if in an examination, various joint products are given, suppose product A, product B, product C. And guys, remember where to apply this method. It is very important point. And profit percentage of each product is given. Product A, product B, product C, suppose 3 products are there. Okay, product A, product B, product C, 3 products are there, and profit percentage is given in the question. And profit percentage of each product is different. Suppose profit percentage of A is 15% on sales, B is 20% on sales, and C is suppose 25% on sales. So if in a question, profit percentage of all the joint products are given, okay, then you will have to calculate the reverse cost method. It is a part of NRV method only in your module. Now, how to work out that reverse calculation? It is also called as a Tarak Mehta ka Ulta Chashma. Means what? Guys, first of all, you will have to write the sales value, final sales value, minus profit. Profit percentage is given. So sales minus profit will be your total cost. Right, guys? Total cost minus selling and distribution expenses minus further processing cost. Remaining will be your joint cost. But guys, most important adjustment, hidden adjustment here is of that selling and distribution expenses. Now everyone please concentrate here. It is a very important adjustment, and almost each of these type of question, this hidden adjustment will be there in your examination. Now what is that hidden adjustment? In question, selling and distribution expenses generally specifically will not be given. That 2,000, 3,000, 4,000, 5,000, whatever are the selling and distribution expenses. They will not give directly the amount of the selling and distribution expenses. Now, what they will do? I'll take with example. Suppose product 1, product 2, product 3, total sales is given in the question, and the total sales is, say for example, for simplicity, I will take this example, 1 lakh rupees is your total sales. Then profit is also given. As I told you, profit percentage of all the product are given. So suppose total of the profit is 20,000, right guys? Total of the profit is 20,000. Now sales minus profit is equal to total cost. Boys and girls, your total cost is 80,000, right guys? Sales minus profit is equal to total cost. Total cost is 80,000. Now in the question, further processing cost is given separately for each product. Suppose for the first product, further processing cost is 5,000. For the second product, further processing cost is 15,000. For the third product, further processing cost is 4,000, say for example. So 5,000 plus 15,000 plus 4,000, right guys? Now if I take the total of these, it comes to 24,000. So yeah. So further processing cost is 24,000. And in the example, guys, boys and girls, 70,000, or I'll take 50,000 is your total joint cost, total common cost, common material, common labor, common overhead, common direct expenses. So total cost is given in the question, total joint cost is 50,000. Now, how this hidden adjustment work? Let's understand, guys. First step, you'll have to work out sales minus profit is equal to total cost. How much it is? Guys, it comes to 80,000, right guys? Now compare this 80,000 with further total of the further processing cost and that joint cost. Now you'll have to take the total 24,000. Here it is 80,000 and take a total of this 24,000 plus 50,000. Guys, boys and girls, it comes to 74,000. I think so, right guys? So you'll have to calculate the total cost with the help of two formula. Sales minus profit is equal to total cost. It is 80,000. Joint cost total plus further processing cost total, it comes to 74,000. Now boys and girls, compare these two, 80,000 and 74,000. Okay, your total cost should be 80,000, but further processing cost and joint cost is 74,000. In such a situation, this balancing figure 6,000 will be your selling and distribution expenses. In absence of the method given in the question, the selling and distribution expenses will be allocated to various products on the basis of sales value. Yes guys, this will be allocated to various products on the basis of sales value. Say for example, sales value is given for the first product is 40,000, second product is suppose 40,000, third product is 20,000. Then the selling and distribution expenses will be allocated to various products in the ratio of that sales value. So 6,000 divided by 1 lakh multiplied by 40,000. Guys, boys and girls, in the first column it will be 2,400, second column also 2,400, and in the third column it will be 1,200. Wrong row I have written. So I think so 2,400 and 1,200 it will be your selling and distribution expenses. So remember this adjustment every time, most of the time this adjustment will be repeated in your example. Okay, so how to work that? Take a total of the sales, take a total of the profit. Sales minus profit should be your total cost, and take total of joint cost and further processing cost and compare these two. Okay, if your above total cost is higher, then the balancing figure will be your selling and distribution expenses. In absence of the method given, allocate that selling and distribution expenses in the ratio of sales value. I hope so this point is clear to every one of you. Now next, so we have completed 6th method. 7th method is really similar like a reverse cost method, but here profit percentage of all the product is same. So constant gross margin method mein, what is the difference between reverse cost method and constant gross margin method? In the reverse cost method, profit percentage of all the product are different, but under constant gross margin method, profit percentage of all the product is same. Now how to calculate that constant gross margin is simple formula. Take a total of the sales of all the product A, product B, product C. Take a total of sales. Okay, then deduct all the cost, total of further processing cost, total of the joint cost, total of the selling and distribution expenses. So guys, you will get here gross profit, and then gross profit divided by sales, it will be your gross profit percentage. So simple, total of the sales of all the product A, B, C, 1, 2, 3, whatever the product are there, take a total of the sales, take a total of the joint cost, take a total of further processing cost, take a total of selling and distribution expenses of all the product. So sales minus all these costs will be your gross profit upon sales, it will be your gross profit percentage. Okay, now as I told you, this method is similar like a reverse cost method. So final sales value minus gross profit. Okay, that profit percentage we have calculated, multiply that gross profit with the sales, so it will be your profit. So it will be, balancing figure will be total cost minus selling and distribution expenses minus further processing costs, so remaining figure will be your joint cost. So format is similar like a reverse cost method. So seventh method is also completed. Now let's go to the eighth method, last practical method. One more theoretical method is also there, we'll discuss it later. So eighth method is contribution margin method. In the contribution margin method, guys, you have given two part of the joint cost. First part of the joint cost is variable cost, and another part of the joint cost is a fixed cost. Okay, so variable cost and fixed cost. So here contribution margin method is very simple. Variable cost will be allocated, first of all, variable cost will be allocated to the various product on the basis of quantity, physical output. So variable cost will be allocated on the basis of physical output. Then sales minus variable cost will be contribution. So fixed cost will be allocated in the ratio of contribution. So method is very simple. Variable cost and fixed cost will be given separately for that joint cost. First of all, allocate the variable cost in the ratio of physical output. Then sales minus variable cost will be your contribution. Then fixed cost will be allocated in the ratio of your contribution. So this is it. These are all the 8 practical methods applicable for you. Ninth method is a technical method. Technical method, appoint the expert, and expert will, through some testing, through his experience, will identify how much joint cost will be allocated to various products. Of course, that technical expert will also apply any one of the 1 to 8 method. So this ninth method is a theoretical method. 1 to 8 method are your practical method. Alright, guys. So these are all the 8th method. First method we have seen, physical output method. In the ratio of physical quantity, joint cost will be allocated. Second method was average unit cost method. Under average unit cost method, calculate first average unit cost, total joint cost divided by total physical output. Average unit cost per unit will be there, multiply with the quantity. Third method, sales value at the split off. On the basis of total sales value at the split off, allocate the joint cost. Next, fourth method was final sales value method. In the ratio of total final sales value of the product, allocate the joint cost. Next method was, fifth method, NRV method. How to calculate that NRV? Final sales value minus further processing cost minus selling and distribution expenses. It will be NRV. In that ratio, allocate the joint cost. Next, profit percentage is given for all the product, almost all the product, and profit percentage of all the product is different. Then reverse cost method will be applicable. Final sales value minus profit, it will be total cost. Selling and distribution hidden adjustment can be there. Then further processing cost deduct, selling and distribution deducted, further processing cost will be deducted. Remaining figure will be your joint cost. Same format will be applicable for the constant gross margin method, and constant gross margin method will be applicable if all the product profit percentage is similar. How to calculate that constant gross margin is very simple, guys. Final sales value of all the product minus further processing cost of all the product minus selling and distribution expenses of all the product minus joint cost of all the product, it will be your gross profit. So gross profit upon sales will be gross profit percentage, and format will be same. Next, if variable cost and fixed cost is given separately, then contribution margin method will be applicable. Here variable cost will be allocated in the ratio of physical output, then fixed cost will be allocated in the ratio of contribution. So you'll have to remember this. And last method was a technical estimate method. Now Prabhu, this topic is absolutely very simple topic, but in examination some student will get confused regarding which method to be applicable if method is not given in the question. Sometime specifically method will not be given in the question. Now please everyone concentrate. I will give you one very important thumb rule or sequence to be followed. if the method is not given. It will really help you. Okay, now guys, first if remember these steps, if joint cost is given in two part, joint cost is given in two part, variable cost given separately, fixed cost given separately, then you know that which method is to be applicable. Here you are going to apply in this form, in this question you are going to apply contribution margin method. Contribution margin method. As I told you, under contribution margin method, variable cost first will be allocated in the ratio of physical output quantity, and the fixed cost will be allocated in the ratio of contribution. In the ratio of contribution. I hope so this point is clear to every one of you. So while reading the question, if method is not given, please check whether variable cost and fixed cost given separately. If no, if yes, then apply this method. If no, then check whether profit percentage is given. You'll have to check whether profit percentage is given, and profit percentage is given and profit percentage of all the product is different, then reverse cost method will be followed. Okay. Next, third method. If profit percentage is given and same profit percentage is given for all the product, then you know that constant gross margin method will be applicable. Now next, if variable cost, fixed cost separately not given, if profit percentage is not given, okay, same profit percentage is also not given, then which method is to be followed? Then guys, boys and girls, in rest all the example, most of the time our institute follows sales value at split off method. Sales value at split off method. You can check any question where these methods are not given. You follow these three steps. If this is not there, then institute allocated joint cost on the basis of sales value at split off method. In most of the question, there are some exception as well, but in the most question you will get that this method will be applicable. Sales value at split off, total sales value at the split off. In this ratio, joint cost will be allocated. Okay, so I hope so this point is clear to every one of you. Now next, guys, boys and girls, let's solve some practical question. Just a second. So guys, start with the first question. In a manufacturing, main product X, company processes the incidental waste into two byproduct A and B. From the following data relating to the product, you are required to prepare comparative profit and loss statement showing individual cost and other detail. Total cost up to the separation period was 3,10,400. So cost up to separation, this is also called as a joint cost. So cost up to separation is your joint cost. Joint cost is 3,10,400. Next, particulars, main product A and B. Sales is given. Cost after separation is given. Cost after separation is also called as a further processing cost. Further processing cost. Okay. Next, profit percentage is given, and very important adjustment, profit percentage is given for product A and product B. Profit percentage is 20% and 30%. Estimated selling expenses as a percentage of sales value. Okay, sales percentage is given. Selling expenses percentage is given of the sales value. Next one. Here in the question specifically, you have to use a reverse cost method. Here in this question specifically, you will have to use reverse cost method, right guys? So reverse cost method is to be followed. Now guys, read question carefully. In the reverse cost method, what we have seen, profit percentage should be given of all the product. Okay, you tell me, are sir, at the time of discussion you told us that profit percentage of all products should be given. Here in this question, profit percentage of A and B is only given. Profit percentage of main product is not given. Then how you will apply this reverse cost method? The point is very simple, guys. Out of three product, now remember carefully, out of three product, guys, profit percentage is given for the two product. Suppose out of three product, two product profit percentage is given. Then apply the reverse cost method for these two product. Okay, apply the reverse cost method for the two product. Calculate the joint cost applicable to the two product. And from the total joint cost, if you deduct the total joint cost of the two product, remaining cost will be for the third product. I will repeat again. Profit percentage of suppose product A and product B is given. So apply reverse cost method. Calculate the joint cost of product A and product B. Okay. So take a total of that joint cost applicable to product A and B from the total joint cost of 3,10,400. Deduct the joint cost of product A and B. Remaining joint cost will be of the main product. So this is also one permutation combination of this type of question. So chalo, reverse cost method. In that reverse cost method, we'll apply this reverse cost for only two product whose profit percentage is given, that is product A and product B. So sales value, yes, I'll write that sales value. How much is the sales value for the product A? It is 64,000 and product B it is 96,000. Total will be 1,60,000. Profit is given. Remember, profit percentage of sales should be given. So sometime institute will confuse you. Profit percentage of cost is given. Suppose profit percentage of costs 25% given. So you should understand profit percentage of cost is 25%. So sales ka it will be 20%. So remember this type of permutation combination. Next one. So profit will be 20% and 30%. So 20%, 64,000 multiplied by 20%, it will be 12,800. Okay. In the next column, 96,000 multiplied by 30%, I think so, right? It will be 28,800. 28,800. So total will be 41,600. Now sales minus profit is equal to your total cost. 64,000 minus 12,800 will be your total cost. It will be 51,200. 51,200. Then 96,000 minus 28,800. It will be 67,200. It will be 67,200. So total will be 1,18,400. Now selling expenses is given as a percentage of sale, 10% and 15%. Here selling expenses are given directly, so there is no hidden adjustment. So 10% will be 6,400 and 15%, 96,000 multiplied by 15%, it will be 14,400. Total will be 20,800. Further processing cost is also given in the question. Further processing cost is 12,800, and next one 14,400. Total will be 27,200. Now remaining will be your joint cost. If you can check that from the total cost, we have deducted selling expenses, further processing cost, remaining will be your joint cost. You can check that 51,200 minus 6,400 minus 12,800, it will be 32,000 joint cost applicable to buy product A. Then 67,200 will be your total cost, 14,400 minus 14,400, it will be 38,400. So you have calculated joint cost applicable to two product out of three. A and B, you have calculated the joint cost. Remaining joint cost will be of the main product. Now, how much is your total joint cost? It is 3,10,400. 3,10,400 is your total joint cost, right, guys? 3,10,400. It is given in the question. 3,10,400 is your total joint cost minus joint cost applicable to two product. It will be 70,400. So, boys and girls, 3,10,400 minus 70,400. Joint cost applicable to main product will be 2,40,000. Right, guys? Have you got this? So, out of three product, applied reverse cost method, calculated the joint cost for the two product. Then from the total joint cost, if you deduct the joint cost of the two product, remaining joint cost will be of the main product. So it will be 2,40,000. I hope so this point is clear. In this question, we need to calculate profit as well. So let's quickly calculate the profit. Main product sales value is given 8 lakhs. Okay. Product A sales value we have written there 64,000. Product B sales value we have written 96,000. So total will be 9,60,000 minus cost. So joint cost 2,40,000 is the joint cost of the main product. Then for product A, joint cost we have calculated 32,000. For product B, it is 38,400. Right, guys. Further processing cost. So let's check. For the main product, further processing cost is given 80,000. Further processing cost is given 80,000. ठीक है. For product A, further processing cost was 12,800. For product B, further processing cost will be 14,400. If we can check that, total will be 1,07,200. I'll check that. 80,000 plus 12,800 plus 14,400 G. 1,07,200 is your total further processing cost. Selling and distribution expenses of the main product, you can check that 20%. So 8 lakhs into 20%, 1,60,000. Then for product A, selling expenses is given 6,400 and 14,400, I think so, right? So now let's take a total cost. 2,40,000 plus 80,000 plus 1,60,000. 4,80,000 is your total cost of main product. Then byproduct total cost we have already calculated 51,200. For B, 67,200. Now if you can check that, profit will be, guys, 8 lakh minus 4,80,000, it will be 3,20,000. 6,40,000 minus 51,200, sorry, 64,000. 64,000 minus 51,200, it comes to 12,800. Then 96,000 minus 67,200, your total comes to 28,800. Yes, sir. And total profit will be 361,600. So remember, guys, if out of 3 product, profit is given for the 2 product, then don't hesitate. Calculate the joint cost of the 2 product, remaining joint cost from the total, deduct the joint cost of the 2 product, remaining joint cost will be of the remaining product. Okay. If you have 2 product and profit is given for 1 product, then apply reverse cost method and calculate the joint cost of the that product, and remaining joint cost will be of the remaining product. Let's go to the second question. HKC Limited manufactures product A which yield 2 byproduct B and C. In the period, the amount spent up to the point of separation was 8,000. So amount spent up to the point of separation means 8,000 is your joint cost. It is estimated that profit on each product as a percentage of sales. Okay, same question like first question. Profit is given 30%, 25% and 15% respectively. Subsequent expenses are particulars, product A, product B, product C, material, labor and overhead. Total subsequent expenses means further processing cost is given, then sales is also given. Prepare a statement showing apportionment of the joint expenses of a manufacturer over the different products. So apportion the joint cost. Also presume that, very important adjustment, also presume that selling expenses are apportioned as a percentage of sales. In the ratio of sales, selling and distribution expenses will be allocated. Now it is very interesting question, guys. So in this question, which method is to be applied is not given. You need to apportion the joint cost, but which method is to be applied for apportionment of the joint cost is not given in this question, guys. So I have given some deciding factor. Whether variable cost, fixed cost given separately, answer is no. Whether profit percentage is given, yes. Whether profit percentage is different, yes. Then apply reverse cost method here. Okay, so profit percentage is given here 30, 25 and 15%. Okay, 30, 25, 30%, 25% and 15% is your profit percentage given in this question. So let's quickly apply that reverse cost method. Total sales value. Okay, so how much is your total sales value? 6,000 is your total sales value. 4,000 is your total sales value. 3,500 is your total sales value. 12,500 is your total sales. Deduct the profit. Percentage is given 1,800. 2,000 means 1,000. 4,000 into 25%. 2,500 into 15%, 375. I think so. I'll check that. 2,500 multiplied by 15%, your answer comes to 375. So boys and girls, 1,800 plus 1,000 plus 375, total is 3,175. Now total cost, sales minus profit is equal to total cost, 4,200 in the first column, second column 3,000, and third column 2,125. I'll check the total, 4,200 plus 3,000 plus 2,125. Guys, 9325 is your total cost. Now, yes sir, ignore this line, ignore this line, ignore this line, ignore this. Okay. Now I told you there can be a hidden adjustment of selling and distribution expenses. Here selling and distribution expenses are given. How to apportion? But the amount of selling and distribution expenses is not given. Now how to work out that? I told you, take a total of further processing cost. Now, how much is your further processing cost? I'll check that. 450, 325, and 150. Guys, boys and girls, total is 925. I'll check that. 450 plus 325 plus 150. 925 is your further processing cost, right? Then take a total of the joint cost. Joint cost is given in the question, 8,000. So, boys and girls, take a total of joint cost and further processing cost, it comes to 8,925, right sir? Absolutely correct. And take a total cost with the help of formula, sales minus profit is equal to total cost, it comes to 9,325. Kuch to gadbad hai daya. What is that gadbad? You can check that. So guys, total cost is 9,325. But if you take a total of this, it is 8,925. So 9,325 minus 8,925, balancing figure is 400. That 400 will be selling and distribution expenses. In absence of the method given, apply that 400, apportion that 400 in the ratio of sales quantity. Sales value, sorry, not quantity. In this question, it is given. So no problem at all. So I hope so this point is clear, how to work out that hidden selling and distribution expenses. Now 400 will be allocated in the ratio of sales value. So guys, boys and girls, 400 divided by 12,500 multiplied by 6,000. So it comes to 192. So if you multiply 4,000, it will be 128. If you multiply 2,500, it will be 80. Now you'll get the total joint cost. You'll get the total joint cost. You can check that 4,200 minus 192 minus 450, 3,558. Obviously, another one will be same. So selling expenses, how I have calculated? Okay, take a total cost. Sales minus profit is equal to total cost. It comes to 9,325. Okay. From the 9,325, deduct total of joint cost and further processing cost. So joint cost is 8,000. Further processing cost is 925. So remaining balancing figure will be your selling and distribution expenses. Allocate this in the ratio of sales value. I hope so. This point is clear to every one of you. Next one. Let's go to the third very important, interesting question. So many examination this question is asked. So many RTP also this question is there. Amrita Limited produces 2,30,000, 25,000, 20,000, 75,000 units of the 5 product A, B, C, D and E respectively in a manufacturing process and sells them at 17 rupees, 13 rupees, 8 rupees, 10 rupees and 14 rupees per unit. Okay. Except product D. Remaining product can be further processed and then can be sold at 25, 17, 12 and 20. So boys and girls, 2 sales price is given. First sales price is sales value at split off. First sales price is sales value at split off and second one is final sales value. Except product B, all other product can be further processed. Okay. Raw material cost is 35,90,000. Other manufacturing expenses are 5,47,000 in a manufacturing process, which are absorbed. Okay. So these are the 2 joint costs. These are the 2 joint costs which are absorbed on the basis of NRV, net realizable value. How to calculate that net realizable value? We have seen final sales value minus further processing cost minus selling and distribution expenses. It will be your NRV. In that ratio, joint cost will be allocated. Let's see. Further processing cost of A, B, C and E. Why not D? Because D is sold at the split off. All other product can be further processed. So A, B, C and E, further processing cost is given respectively, and fixed cost is 4,73,000. So guys, boys and girls, very important adjustment. Here, okay. Guys, first two line is critical. Joint cost is given 35,90,000 and 5,47,000. These two costs will be allocated in the ratio of NRV. Then further processing cost is given and then the fixed cost is given. Remember, so fixed cost is not added here. Fixed cost is not added here. Hence, fixed cost will not be allocated to product A, product B, product C, product D. Fixed cost will be written directly in the total column. Because specifically what they have told us, 35,90,000, 5,47,000 will be allocated in the ratio of NRV. That's it. Joint cost, these are the two joint costs. So they have not included fixed cost in that. Hence, in this situation, fixed cost will not be allocated to A, B, C, D and E. Fixed cost will be written separately in the total column. Next, you are required to prepare the following in respect of the coming year. Now, Prabhu, one very important adjustment. So suppose if in this question NRV method was not given, in this question NRV method was not given, in such a situation, boys and girls, joint cost will be allocated on the basis of sales value at split off. I told you this. If profit percentage is not given, if variable cost, fixed cost is not given separately, right? So don't assume that RSR fixed cost is given separately. No. So guys, this is not the case. So profit percentage is not given. Then guys, you'll have to apply sales value at split off. But in this question, they have given specifically NRV method. Sure. Statement showing that fixed cost is not to be allocated. Hence, that contribution margin method is not applicable here. You are required to prepare the following in respect of the coming year. Statement showing income forecast of the company, assuming that none of the product are to be further processed. So if none of the product are to be further processed, all the product will be sold at the split off. Statement showing income forecast of the company, assuming that A, B, C and E are to be processed further. Can you suggest any other production plan where the company can maximize its profit? If yes, then submit a statement showing income forecast arising out of the adoption of that plan. So guys, boys and girls, let's work out quickly. So first question is, guys, allocation of the joint cost. Okay, first question will be allocation of the joint cost in the ratio of NRV. How to calculate that NRV? So the NRV, how to calculate? So the final sales value minus further processing cost will be your NRV. For the product D, as D is not further processed, take the sales value at split off. Okay, so you can check that 25 and 17. What is that 25 and 17? It is the final sales value. So boys and girls, quantity multiply with the selling price per unit. For product D, they have taken sales value at the split off. Further processing cost is not there. So they have calculated the NRV and the joint cost will be allocated in the ratio of NRV. Now, how much is your joint cost? You can check that. Guys, 41,37,000. Where? कहाँ से मिला? Sir ji, 35,90,000 plus 5,47,000. It will be total 41,37,000. Okay. So this 41,37,000 will be allocated in the NRV ratio. 41,37,000 divided by 59,10,000 multiplied by 41,37,000 divided by 59,10,000 multiplied by 37,50,000. It will be 26,25,000. If I multiply with 3,60,000, answer will be 2,52,000. If I multiply by 2,50,000, answer will be 1,75,000. Then if I multiply 2 lakh, then it will be 1,40,000. Right? 13,50,000 is NRV of the last product. Then it will be 9,45,000. You can check that 26,25,000 plus 2,52,000 plus 1,75,000 plus 1,40,000 plus 9,45,000. Total will be 41,37,000. So how to calculate it, that NRV? Final sales value you'll have to take. For product B, take a sales value at split off, okay, because it is not further processed. Then deduct the further processing cost, it will be NRV. In that ratio, you'll have to allocate the joint cost. Okay. So joint cost already I have written here. Next. So next statement, the first question, prepare a statement that none of the product is processed further. All the product are sold at the split off. So what will be the selling price? So 17 multiplied by 2 lakh. 34 lakhs. ठीक है. Next one, 13 multiplied by 30,000, Prabhu. It will be 3,90,000. Then 8 multiplied by 25,000, 2 lakhs. Then 10 multiplied by 20,000, it will be 2 lakhs. And for product B, 14 multiplied by 75,000, your answer comes to 10,50,000. 34 lakh plus 3,90,000 plus 2 lakh plus 2 lakhs plus 10,50,000, 52 lakh 40,000 is your total sales. ठीक है, sales at the split out. Then deduct the joint cost, assuming that none of the product are further processed. ठीक है. So what will be the joint cost? You can check that joint cost कितना था. How much was joint cost? 26,25,000. ठीक है, 26,25,000 done. Next one, 2,52,000. 2,52,000. ठीक है. Then for product C, you can check that product C 1,75,000. For product D, you can check that 1,40,000. And for product E, it will be 9,45,000. Total should be 41,37,000. Now, guys, fixed cost. Now, take a gross profit. You can check the gross profit. 34 lakhs minus 26,25,000. It comes to 7,75,000. So 3,90,000 minus 2,52,000, 1,38,000. 2 lakh minus 1,75,000, 25,000. 2 lakh minus 1,40,000, it will be 60,000. 10,50,000 minus 9,45,000, it will be 1,05,000. 11,03,000 is your gross profit. As I told you, fixed cost will be written separately. Don't allocate the fixed cost to various products. Directly write that fixed cost into the total column. Fixed cost is 4,73,000. So profit will be 6,30,000. Right, Prabhu? Your profit will be 6,30,000. Done. Next, let's go to the second question. Second question is asked, boss, calculate the profit if A, B, C and E further process and D is sold at the split off. Now let's calculate that profit. So sales value of product A 50 lakhs, then 5,10,000. 50 lakh, then 5,10,000. Okay. For product C, total sales value is 3 lakh. 2 lakh for product D. And for E, it is a 15 lakhs. You can check that 50 lakh plus 5,10,000 plus 3 lakh plus 2 lakh plus 15 lakhs. It will be 75,10,000. Joint cost. So joint cost is 26,25,000 in the first column. Second column will be 2,52,000. Third column will be 1,75,000. Next column will be 1,40,000. Last column will be 9,45,000. Total will be 41,37,000. Minus further processing cost A, B, C and E. Further processing cost. Let's check that further processing cost which is given in the question. 12,50,000, 1,50,000. ठीक है. 12,50,000, 1,50,000. Then for product C, it will be 50,000 and 1,50,000. 50,000 dash and 1,50,000. I'll check that before I proceed. 12,50,000 plus 1,50,000 plus 50,000 plus 1,50,000. Total comes to 16 lakh. Absolutely correct. Now, guys, total cost. Okay, so it will be joint cost and further processing cost. So 26,25,000 plus 12,50,000, 38,75,000 minus 50 lakhs. Gross profit will be 11,25,000. Correct, guys. 2,52,000 plus 1,50,000. Total of the cost is 4,02,000 minus 5,10,000. 1,08,000 is a profit of gross profit of B. Then 75,000, 2,25,000, I think so. And 3 lakh minus 2,25,000, 75,000 will be your profit. Then, guys, 1,40,000 only, 60,000 will be the profit. 9,45,000 plus 1,50,000, Prabhu, your answer comes to 10,95,000 and 15 lakh if I deduct 4,05,000. And fixed cost will be deducted from the total. Total will be 13 lakhs. Now the problem is that, is there any other alternative plan where you can maximize the profit? Now let's check that. Now let's compare above two table, first table and second table. This table give you gross profit or net profit information if all the products are sold at the split off. The second table give you information that A, B, C and E further process. Now let's check, let's compare A. If A is sold at the split off, profit is 7,75,000. But if A is further processed, then profit will be 11,25,000. So profit of further processing is more. Hence, A should be processed further. Okay. Let's talk about B. 1,38,000 if it is sold at the split off, and here 1,08,000. Oh, it means that B should be sold at the split off because gross profit at the split off is more. Let's talk about C. If it is sold at the split off, profit will be 25,000. If it is further processed, profit will be 75,000. So that C should be further processed. Either way, D should be sold at the split off because it is not further processed. Let's talk about E. If it is sold at split off, 1,05,000 is a profit. And if it is further processed, then 4,05,000 is a profit. Then E should be further processed. So, boys and girls, A, C, E should be processed further. B, D should be sold at split off. That's it, guys. Perfect, eh? Yes or no? So here explanation is given. A, C, E, okay, should be further processed. B, D should be sold at the split off. So you compare the profit. Perfect, guys. And again, you'll have to prepare the profitability statement of A, further process, B, sold at a split off, C, should be further process, D, split off, and E, further process. Okay. So the product which are sold at the split off, further processing cost will not be there. And just you can now first and second table, you just have to compare and check which product is further processed. So if further process is there, refer first table, refer to this table, further process. And if the product are sold at the split off, then refer to above table. So I'll just take a total of the profit, whether it is matched or not. I'll check that. 11,25,000. 11,25,000. Now B should be sold at split off. So split off ka profit 1,38,000. Okay. So it will be 1,38,000. Now C should be further process. So further process profit will be 75,000. 75,000. D should be sold at the split off. Split off profit is 60,000. Product C का कितना था? 75,000. Okay, D will be 60,000. And E further process. So profit of E after further processing will be 4,05,000. 4,05,000. You can check that. 11,25,000 plus 1,38,000 plus 75,000 plus 60,000 plus 4,05,000. Your total comes to 18,03,000 minus 4,73,000 is the fixed expenses. Now 13,30,000 is your new profit, right? So you have compared which product is sold at the split off, which product is further processed. On the basis of higher profitability, take the decision. So here we have completed the practical question. Now, guys, boys and girls, everybody please concentrate here. In so many questions, they will ask whether to further process or sold at the split off. So further processing decision, they will ask in examination. So whether the product should be sold at the split off or whether it should be processed further. Let's discuss that important point. Everybody please concentrate. You can solve any question with the help of this. Okay. So Prabhu, let's take an example of petrol and speed petrol. Okay? What is a speed petrol? If you go to the petrol pump, so two type of petrol you will get. First one is normal petrol. Say for example, today petrol price is, suppose today petrol price is 110 rupees, right? And speed petrol, refined petrol, speed petrol price is suppose 120 rupees. So they remove some impurities from the petrol, it becomes the speed petrol. Okay, it will give more mileage, carbon will be less, so it is good. But petrol will be further refined into speed petrol. Obviously, you are going to incur the additional cost. So they have given further processing cost. Suppose to convert petrol into speed petrol, you'll have to further refine it. Something 8 rupees cost per liter you are gonna incur. Now the question is that whether company should manufacture petrol or whether company should manufacture speed petrol is a point of discussion right now. So remember, sir, the further processing decision. So here you'll have to take a final sales value. Final sales value. Now how much is your final sales value here? Final sales value means after further processing, how much is your sales value? So 120. From that, you'll have to deduct sales value at split off. Sales value at split off is suppose 110. So by converting petrol into speed petrol, incremental sales. Incremental sales means by how much sales is increased. Guys, boys and girls, your sales is increased by 10 rupees. But to increase the sales value by 10 rupees, you will have to incur additional further expenses. So minus further processing cost. How much is the further processing cost? It is 8 rupees. Right, guys? Therefore, incremental profit. Incremental profit is 2 rupees. Means if you convert petrol into speed petrol, your profit is increased by 2 rupees. Now what will be your decision? Saji, sell speed petrol. Speed petrol because of the incremental profit. Sell the speed petrol. Right, guys? Everyone got this? Now one more example. Suppose I'll take an example of diesel. Guys, diesel price is suppose 100, normal diesel, and there is one more diesel available in the market, that is turbo diesel, which is sellable in the market at 110 rupees per liter. But to convert diesel into turbo diesel, to remove its impurity, okay, they are going to incur further processing cost of suppose 13 rupees per liter. You are going to incur the additional cost. Now the question is whether to sell diesel or turbo diesel. Now let's take an example again. We'll repeat this step. Final sales value means sales value of the turbo diesel. It will be 110 minus sales value at split off means diesel 100 rupees. So by converting diesel into turbo diesel, you are increasing the sales value by 10 rupees. But to convert that diesel into turbo diesel, you are going to incur the additional further processing cost, and that further processing cost is 13 rupees. So to increase the sales by 10 rupees, you are increasing your cost by 13 rupees. There is an incremental profit or there is an incremental loss, Prabhu. There is an incremental loss. So if there is an incremental loss, diesel should not be converted into turbo diesel. So here your answer should be company should not further process, company should sell diesel only. I hope so. This example is clear. So I have given this example per unit wise. So you take total, so total final sales value minus total sales value at the split off, incremental total sales minus total further processing cost. This I have given only for your understanding purpose, guys. Right? I hope so this point is clear to every one of you. Write it down, guys. It is very simple. You can solve any question whether to further process or not. So if there is incremental profit, further process. But if there is incremental loss, don't further process. Sell at split off only. I have given example per unit wise. Always take total. Always take total wise, okay, not per unit. So this is only for your understanding purpose. Now next most important point to be discussed here is that, so it is an advanced level question, and that advanced level question is, everybody please concentrate here. Advanced level question, if the question 8 marks question, 10 marks question, what is that? Suppose you have given 2 product or 3 product, whatever, product X, product Y, production quantity is given. Production of X is suppose 40,000, production of Y is 1,20,000. सही है? Production of X is 40,000 and Y is 1,20,000. Then sales quantity is given. Sales quantity of X is 36,000 and sales quantity of Y is 1 lakh. So, boys and girls, what is important in this? अरे sir, ये तो simple है. Production quantity is given, sales quantity is given. It is not simple. It is very important. 3 thumb rule I'll give you. You'll make no mistake. Now, boys and girls, if your production is 40,000, if your sales is 36,000, opening stock is not given. But here, closing stock you can work out. Here, closing stock is 4,000 quantity. Next one. 1,20,000 is your production quantity of Y and you are selling only 1 lakh, means 20,000 will be your closing stock quantity, right, Prabhu? Now the problem is that while apportionment of the joint cost, which method is, which quantity should be taken, whether we take production quantity or sales quantity. While calculating the profit, which quantity should be taken. While calculating further processing decision like above, which quantity is to be taken, as I told you, take total, not per unit, which quantity is to be taken. So 3 thumb rule you'll have to remember, guys. That first thumb rule is that for allocation of joint cost, for allocation of the joint cost, you'll have to consider production quantity. Remember, Sirji. Okay, for allocation of the joint cost, consider the production quantity. Joint cost will be allocated on the basis of 40,000 and 1,20,000. Production quantity should be considered because, Sirji, production cost, joint cost is applicable to the production. Okay, second one, if in a question you need to calculate the profit. So if question is to calculate the profit, then sir, you know that profit will be calculated on the basis of sales quantity. Yes, sir. So production will not give you profit. Sales will give you profit. And third important point, while taking further processing decision, so whether X should be sold at the split off or whether it should be processed further, whether Y should be sold at the split off or whether it should be further processed. So while taking further processing decision, again consider production quantity. Consider the production quantity. Right, guys? So these three thumb rule you'll have to remember if you observe in a question that there is a stock adjustment, closing stock if it is there. So remember, guys, while allocation of the joint cost consider production quantity. While calculating the profit, consider sales quantity, and whether to further process or not, that decision will be taken on the basis of production quantity. So these thumb rule you'll have to remember. You can check, one question is there in your module of this closing stock adjustment, and it is very simple, guys. Now we have already discussed all the 8th method of the allocation of the joint cost. So simple, while allocation of the joint cost, consider production quantity. Suppose method is given sales value at the split off. So 40,000 and 1,20,000 should be multiplied with the selling price per unit. Right now. So while calculating the apportionment of the joint cost, consider the production quantity. So simple, so easy, right? Chalo. So these are the important points which we have discussed. Now last part remain of this topic is allocation. So whether to guys further process or not, I have given here also. You can refer that, incremental profit or loss. Okay. Now treatment of the byproduct. Yes, sir. Treatment of the byproducts. Now what is a byproduct? And what is the difference between byproduct and joint product? All the joint product are of the equitable value, but the byproduct value is less. Byproduct is produced as a waste of a main product, so its value is less. So this is the main difference. In the sugar industry, sugar is a main product and molasses is a byproduct. Okay. Now treatment of the byproduct. First, if the byproduct value is negligible, very small value. Okay, if the byproduct value is negligible, then whatever the realizable value of byproduct will be either deducted from cost of production, or deducted from the cost of sales. Yes, sir. What I told you, one method, that A method I'll discuss later. If the byproduct value is very small, then whatever you realize by selling that byproduct, it will be deducted from the total cost of production or total cost of sales. Otherwise, guys, that income will be credited to costing profit and loss account. It will be written into the credit side of the costing profit and loss account as a miscellaneous income if the byproduct value is very small. But if the byproduct value is considerable, it is not negligible. If the byproduct value is considerable, then consider byproduct as a main product, and all the 8 methods, one of the 8 methods is applicable here. Which are the 8 methods, guys? Average physical output method, average unit cost method, sales value at split off, final sales value, NRV method, reverse cost method, constant gross margin method, and contribution margin method. If the value of the byproduct is considerable, then guys treat it as a main product and apply any one of the 8 method. I hope so this point is clear to every one of you. Next one. Third, if the byproduct requires further processing. If the byproduct requires further processing, means what? Byproduct is not sellable as such. It requires the further processing. Then after further processing, check the resultant product. If the resultant product value is negligible, go to point number 1. Treat it as a miscellaneous income under costing profit and loss account, or deduct it from the cost of production or cost of sale. But if after further processing, the resultant product value is considerable, then treat it as a main product and give the treatment of point number 2. So this is very important theory question as well as a practical question. Okay, so you'll have to remember this. Yes, guys. So I have discussed all the important points of this topic, guys, and I have given you that which method is to be followed. Okay, in absence of the method given, that also point I have given. Whether to further process or not, I have given. Byproduct also calculation, byproduct also treatment we have seen. So here we have completed the revision of this very simple topic. So thank you so much, guys. See you in the next lecture. Take care all.